Good morning, everybody. It's Christian from Serene Education with the 4 majors notes update for the 23rd of May 2012. Hi, folks. Welcome to another day with Serene Education, and I'm just going to be looking at the 4 majors as per usual, starting with the euro against US dollar on a daily. So you can see what happened yesterday. We saw another bearishness in the market, pulling back, and this is primarily after the 23.6% February tracement area had been reached, targeted. You can see quite clearly there from the previous high that we had recently to this low, this bounce over here. That would have been our support, which happens to tie in quite nicely with our prior support back in early January. How high this actually was to bounce was to see price actually trading above, finding support above the 23.6 and heading towards the 38.2. That failed to materialize as price headed ended up being bearish throughout the whole yesterday, not making higher highs, closing below the 23.6 during the intraday session and going into the US session pretty much following suit to the downside and heading back towards that 12,6,500 mark again, price support. Now what we need to see is a break of this, guys. Get a break of this 12,6,500, then we are in new territory, because that means we are breaking new prior lows, and which means that we could be looking for lower lows. Way down here is the last time back in 2010 here at the 12,150, just below the 12,200 mark, and that is a good 100, 200, 300, 400 pips away, 450 pips, 500 pips if you take these little 50 pip increments here. So this is going to be a very, very decisive area here of support. If we break below that, then things are pretty much dire. And as it stands, yesterday's bearish candle, very much tells the truth in terms of sentiment, where the sentiment lies, and it still looks very, very unsavory at the moment. So if you want to bide your time, look for a break below 1265, because we don't want to be shorting here, and we could very well see another bounce. Yes, we had a bearish candle here, bearish engulfing, but it doesn't mean it did not at any one stage close lower than the support. In fact, it actually closed just slightly higher than the support. So got to see the support being breached here, 1265, a nice close below that. Candle close has to happen before we see any indication of a bearish sentiment or selling it setup ensuing. Everything else is in our favor. The only thing that's not in our favor, we have a red arrow, red candle, CTC's red. We are retesting a support. This support has to be breached in order to see a genuine sell signal. On to sterling, and here again exactly the same, repeating the same thing as what the euro was doing. Higher swings depicting upside movements up until recently, pullback, and we targeted the 1600. 1600 was prior very strong support and resistance level. Price pulled back to it very bearishly indeed, a bearish engulfing into this area here. We failed to see a hammer or a stop here at the psychological area here, and price just moved straight through it with a lot of momentum, a lot of selling over 3 consecutive days. Massive selling ensued, and it took us well below the 1600 and well below the institution moving average. In doing so, we saw a slight pullback to the underside of the institution moving average. Price failing to actually build on that momentum, this upside momentum here at the 15800, and subsequently price failing yet again. Yesterday's bearish engulfing, now the underside of this institution moving average. So what we had is a breakout, the pullback, and now potentially a continuation pattern occurring. So we take the all-time low here we saw in early Jan to this high we saw here in late April. You can see the 23.6 being targeted, 38.2 where price hesitated at, 50% there again. As I mentioned, we do need to see a break of this 50% line, this consolidation area here. Sure enough, we got that. Now it's trading on the underside. It needs to stay on the underside of the institution moving average and forming a lower swing. Anything below, if price gets above 15,800 again, we're looking for more consolidated, bearish consolidation. If it maintains this low here and fails to break and close higher than this area 50%, now it's trading below it. It should now classify now as resistance, and then we should see further continuation to the downside. And our first port of call or first target would be 61.8%. Break below that, then 78.6 somewhere down here, and then ultimately way down here to the January low the January low here at the 15,2500. So as long as price stays below this area here at the 1577 mark, then we should be looking for nothing more than shorting opportunities for the remainder of this week. On to the Swiss franc, good old Swissy. Let's see. prior lows here in August of last year to the highs that we saw in late December, early January of this year. You can see price, after hitting those highs here at 96, went back into this consolidative range to the upsides, maintaining itself above the institutional moving average, so still looking positive throughout, even though we were bearish consolidative. It was still in a bullish upside trend. A lot of hesitation here. We did see a lot of consolidation through 3 months consecutively. However, that institutional moving average still in play, and price still trading above it, and so price making an attempt to trade higher. In doing so, forming higher swings, which dictates upside movement. And sure enough, just recently we've seen all the moving averages below price in order. We've got our blue arrow, blue candles, and our CTC were in blue for the first time. So what do we wanted to see in this case? We want to see a fib retracement area. So this is your high that we saw here in late December, early January, to the low that we saw here at the late part of Feb, and we saw a bounce, a correction. Now you could use these areas here as potential target areas on your fib retracement areas, and sure enough we saw that. Recently we saw prices building on that momentum at 910, which is 23.6. First target would have been 38.2, second target would have been 50, third target would have been 61.8. We're trading above 61.8 now. CTC is very much in our favor. All the moving averages in order, 20, 50, and the institution, all looking good for upside movements. We saw a correction just recently. I think they came roughly around the 78.6. Let me just make sure of that. Let's put that figure in. Apply. Yes. Slight hesitation on the 78.6 mark. Now trading above it again. Yesterday's bullish candle. And I said is if it gets above 95, the 94.50, then we should start seeing momentum still pushing to the upside. Price has moved higher, cancelling this indecision or this bearish indecision just recently. It's moved, it's engulfed this, so it's literally engulfed this consolidative range here. And if it can stay above 945 now and build on that, then ultimately we should be still targeting this down 60 long term. So we shouldn't be looking for any selling opportunities unless the 94.50 has been closed or price is closed below the 94.50. Okay, so keep that in mind, guys. On the daily, it looks strong for upside movement again. So look for any positiveness. Potentially a bounce here at 945 to see a long-term goal of 960 being preferred. Last pair of the day is the US dollar Japanese yen. Let's have a look and see what happened yesterday. Upside move on the candle, moving back up towards the 80 mark again. Subsequently, what's happened on the Asian session is clear resistance. Prior to this 80, this was a massive support and resistance level going back a number of months, in fact. And what we've seen is we've seen a price in the past couple of weeks playing tic-tac with this area quite noticeably. Price moving lower after hitting these highs here at 8,400, and in doing so forming lower swings, heading back towards the 80th mark after this massive move to the upside subsequently since early Feb. In doing so, we've had retracement areas on the Fib retracement lines being met, targeted. 23.6 was the target of this higher, the shooting star exhaustion candle at 8,400. A lot of hammers, bearish engulfing, and then the break over here just in early April. Then we should be targeting 38.2. That was the case. We headed into 38.2. Then went sideways for a number of weeks before we saw another indication of downside moving towards the 50, and in doing so targeting this 80. Very strong price support and resistance. If I move out, you can quite clearly see a lot of support and resistance through this line over here, which happens to be the 80, and price just playing tic-tac with it, moving sideways, consolidative, bearish consolidation, because we're trading below the moving averages by the institution, and we're forming lower swings. And most importantly, our CTC, or count the cash system, was indicating that we should have been looking for nothing more than shorting opportunities. So budget time, consolidative, we want to see price moving away, and sure enough we got this, and it targeted the 61.8 recently. Once it's hit here, it failed to close lower. This candle, yes, it did close lower, but not a very decisive bearishness, very small trading range, very, very unsure bearish move to the downside. And in doing so, we saw this little up candle here, bullish candle, moving higher yesterday, back towards the 80, and finding resistance straight at it. So anybody buying here at 79 would have looked at 80 as a potential target, and sure enough, straight into that. And this morning in the Asian session, we've seen a a buyback. Everybody would have closed their positions. In doing so, people look for shorting opportunities at the underside of 80, and sure enough, that will be seen this morning. A pullback on the underside of 80. As long as 80 stays in the way, it is now a ceiling level, a resistance level. Price has to be trading above it in order to confirm that there could be potential for buying sentiment, and in doing so, breaking above the 20-period moving average. And we could see potentially bullish engulfing here above would then refer to us potentially looking at 38.2 as our first target here at 81. Until such time as that occurs, we should be looking for nothing more than bearish sentiment or bearish opportunity to the downside as resistance is now met at the 80. Okay, so don't look for buying opportunities. If we are seeing clear resistance now, price is spending more time below 80 than above it, so it clearly tells you that sentiment is negative, and as long as 80 remains a major resistance level, then we should be looking for nothing more than bearish sentiment for the remainder of the week. That's it, guys. Hope you have a fantastic trading day. Keep it simple, as I mentioned. Make sure you plot all your support and resistance levels, trend lines, guidelines, etc. like that, and keep it as basic as possible. People who make their trading make it far too complicated these days and get themselves into a real tiz. Back that up with sound money management, and you're on a winning formula, guaranteed. You'll find you'll have more winners than losers if you follow the simple principles of trading. All you students out there that have been taught how to use the CTC, please ensure that you use it correctly and you back it up with sound money management. Other than that, have a fantastic day. Just make a note, look at your news announcements today. There's a lot of news out today for both the European and the US. Make sure you factor that into your trading. You don't want to be looking for potential buying, selling opportunities if there's a lot of volatility out there because of news drivenness. So keep that in mind. Other than that, have a fantastic day, and I'll see you first thing tomorrow morning. Until then, trade serenely.